Today I'm going to talk about a very interesting subject, share market. This is especially target for people who are not still entered the stock market, and I want them to realize that this is something not very dangerous. At the same time, you need to be very careful about it. This is the area where you can really make some money if you are careful, if you are a calculated risk taker. Okay, so let's go into the topic right away. So why should you invest in stock market? Why the stock market has gained so much of prominence? Why it is talked about so much in today's world? Markets have sprung up very heavily right from the COVID season. So what is the reason this is being talked about? So if you see, I've just given a tip of an iceberg. There are about 7 companies I want to tell which has grown exponentially, right? These are the companies, just for an example, which has phenomenally performed and caught the eyes of the stock market traders and also the common public. This is why now common public is getting agitated to invest in stock market, but they are not knowing where to invest, how to invest, what amount of money to be invested, and how much risk is to be taken. This video is entirely to talk about all those aspects. Fine. So let's go with an introduction of what is stock market. Stock market, or share market as we call it, is nothing but a scenario where a company wants to get some money for its working. As simple as that. So what it does, it floats what is called a public issue or an IPO, initial public offering, where it asks the public to invest its money in the company for which they would be giving shares for that. This share will be valued at some price which will be traded in stock market, and depending upon the performance of the company, the share of that company would go up or down if it doesn't perform. This is, in a nutshell, how the share market really works. Now, the question is, what are the types of shares which usually come? Equity share market, this is from an IPO. Then people who already have some shares in the company, they have rights issue. They also have bonus issue if the company is really very happy about it. Okay. So ultimately, a person who is holding some share, at least one share in the company, ideally becomes the owner of the company. So he needs to take part in what is called annual general meeting to vote for certain decisions or propositions kept by the company. So this is in a nutshell about the stock market or the share market or what is an IPO and all the stuff. Let us go into what you need to think are important to invest in a particular company. Right? I will not go into very technical details because let us try to analyze from a very simplistic scenario. When will a company start its operation? When did the company start its operation? You need to have these checkpoints really see. Go to the annual report, go to the website of the company, okay, and go to the feedback of the company. You will get all this information. Once you note down all those things, then you can take a decision whether the company is good enough for an investment, right? So when did the company start its operation? So how long is the company in the market, sustaining the pressure of market, right? And what is its line of business? This is very important because you need to see if the line of business is aligned towards market's trend, towards a technology which is going forward, towards the demand of the consumers. This needs to be relevant. In this context, I would like to tell you that Kodak, Konica, the photography companies have become redundant because they were not able to innovate and create and sustain in the market. Okay, so how much loans they have? What is the profit history? Have they been able to make consistent profits over a period of say 5 years, 10 years and stuff like that? So how much is the loan which is outstanding on the company from all other sources like banks and other things? So what is the profit year on year? Are they giving dividends consistently year on year? Okay, how much is the share price actually started with? How much it has grown up to? And is it really trending towards a growth? Okay, how does it look for this company on a business continuity perspective? Has this company got a future? What are its plans? Okay, and then go into Google and see if there are any negatives of the company, either from the customers or from the vendors or from a general market perspective. So if you are able to summarize all these points, I think you would have come to a decision of whether this company is good enough or not. Okay, these are the broad areas. So I'm not going to PV ratio and dividend per share and all the stuff. Okay, let us keep it on a good high level for a beginner to start with. A beginner is not going to really make all the calculations in the world, then take a decision. That sounds really unrealistic. Okay. Now, let us try to analyze once you start investing in the company, what is your strategy going to be in the company? Okay, in the investments. Distribute your portfolio is the first mantra because I don't want any investor to get locked in a particular sector, and if the sector does not perform because of some government regulations or some market dynamics, you lose all the money. So it is always told that don't put all the eggs in one basket. Distribute your risk, distribute your portfolio. Take about 3 or 4 sectors like automobile, like media, then manufacturing, consumer goods, okay, IT sector, banking sector, on all this stuff. Distribute your investments in all this sector. Balance your portfolio, and then don't try to go with companies which are not known, though they are recommended by a lot of media. Go for branded companies, even if the share price is costly, because branded companies have certain professionalism and strategy to go ahead and market. They have all the ideas in the world with the great qualified people to suggest them how to take the company forward. So go for the branded companies, even if it is little costly. Doesn't matter if you are purchasing only about 1 share or 5 shares or 10 shares. So start with, make regular investments as you get money. But the most important thing is, don't try to invest your hard-earned money. Invest only the money with a mindset that if this is lost, it doesn't hamper your regular routine. Okay. No doubt your money is definitely hard earned. I don't say no, but don't invest some money which is going to be dependent on your children's education or on your retirement or something like that. Invest the money which you are prepared to lose. I'm not telling that this will be lost, but that is the mindset you have to bring into the stock market. Okay. When you are trying to take out your profits from this particular company after you invested, take out only half of it. Suppose you have purchased 10 shares, the 10 shares has given you about 50% increase in the share price. Take only half of it, retain the remaining 25. Okay, that will make a lot of good, because in the coming days, dividends will be shared to you, bonus shares will be given to you, rights issue you will become eligible for, and you will always be trying to continue the journey. Okay, that's very important point. Now let us try to analyze who are the leaders in all these top sectors. Okay, in automobile, if you see Maruti, Tata Motors, and Eicher, Mahindra and Mahindra, banks, HDFC Bank, SBI Bank, Kotak Mahindra Bank, software, all this TCS, Infi, HCL, Wipro, Pharma, Reddy's Lab, Lupin, Divi. FMCG, HUL, Marico, Goddess Consumers. Engineering and constructions, you have L&T, DLF. Okay, jewelry, Titan Industries, and other things. So try to invest in the market leaders, because they always like to be leaders in the market. They have tremendous growth strategies, and that is what you need to look for. Don't try to take risk with unknown companies or companies that just started. Let them grow, let them try to establish in the market. Let us see and analyze from the points which I have given in the previous slide. Then let us take a decision of investing in that. Okay. Now, all this starts with, how do you open a Demat account? I mean, all the companies, right, all the banks right now open a Demat, has a Demat account facility. Open an SBI account, open a Demat account in the same bank where you have an SBI account, so that your fund transfer to the Demat account is quite easy and comfortable. Okay. And then first and foremost, don't try to immediately start investing. Play with the Demat account in the dashboard and all the options. Try to get conversant with that, so that you know how to buy, how to see your portfolio, how to sell it, how to do an analysis, what are the recommendations given by that particular bank on the stock. All these options you need to be conversant with, so that you have ideas, alerts, reminders from time to time. Okay. Now, finally, I will give you about 6 top tips. Okay, go for fundamentally good stocks. Fundamentally good stocks which are established in the market. Don't go with any unknown stock, even if it is recommended by all the media. Please stay away from that, at least when you are a beginner and when you do know the market dynamics. Okay, do self-analysis as the one which I mentioned in my previous slide. Even if the price is more, good stocks, fundamentally good stocks, are good enough for investment, even if there is a slide in the market. Okay, never have emotions attached to any of the companies. If the company is making a profit, book it, come out of it. That's it. If you want to retain, well and good, but don't try to get emotionally attached even if the company is going down. This is where many of the people have lost their ground. Take correct business decision to buy when it is really required, And this is very important because you should not buy at the peak level. Use your intelligence in trying to buy only when the markets are down, not when it's at a peak like 52-week high and stuff like that. Okay, take out the profit at regular intervals so that your break-even is reached. Okay, you try to take back your money what you have invested. That is a very, very important aspect. Don't try to go on accumulating. Try to take only the profits in the market should go on rotating. Okay, friends, I think this is what I wanted to give it to you. All the best for investing. Invest in stock market. It is not a very risky game. If you're trying to take a calculated risk, I think it will give tremendous amount of returns to you. This is something you should not miss in your portfolio. Okay, stock market is where you can gain tremendous amount of profits if you are really clever, if you are wise, and if you are alert. Okay, friends, I think this is all for me. If you like this video, subscribe to my channel and hit the bell button. Right? Bye.